How's it going, traders? It's Papa Wall Street back with another weekend review. Today we're going to look at my top 10 ideas going into next week. And also in that top 10, we'll have a couple of ideas that I've already put out that I'm just going to update. Make sure to hit that like and subscribe button down below so you can get these actionable trade ideas as they come out. If you could leave a comment down below, let me know what you think about these chart videos. And feel free to watch these on 1.5 if you feel like I'm talking too slow. So let's dig into the charts. Yeah, obviously last week, the market has been pulling back, right, for the last 3 weeks. And for those of you who are just watching this particular video, there's a second video I did today on the general market overview. So I would highly encourage you to also watch that video. It'll give a little more context into the names that I'm going to go over today. So yeah, I think, now is definitely the time to be cautious. I've been putting out trade ideas almost every day for the last, 2 to 3 months. And now I'm at that point where I just want to be a little cautious because, in the past we've seen, the market come down, but money rotate into other sectors. This week we saw more of a broader market sell-off. No sector was safe. And so when I see something like that, that's where the red flag goes up. And I just want to be a little more cautious. So just to preface that, I'm not going to probably put out too many trade ideas this week. What I will do is just hunt for that relative strength, keep you updated to the trade ideas that we're already in, and just be cautious because there's no need to trade every day. There's no need to trade every week. We'll let this market pull back, right? Markets go up, markets come down. Eventually they'll bounce and they'll go back higher. And as markets pull back, it provides us with different and newer opportunities to either get into new trades or get into some of the trades maybe that we've missed over the last couple of months. So word of the week is caution and or patience. And let's just dig into these charts and see what we have. So first up, we have American Airlines. This was a trade idea that I put out on the 17th. It did break out. We had earnings on Thursday, I believe. And then Friday basically almost put an inside day in, but we did sell off into the close. And so we came right into the 618 at 2088. That's where obviously it failed. So for this, I would be watching for potentially a back test of the trigger before pushing back up to retest that 618. So keep a close eye on American Airlines, ticker AAL. Jets, which is the airliner ETF, has been showing relative strength in the last few weeks. So keeping a close eye on this. Next up is AMT. This is American Towers off of the XLRE, the real estate ETF. And so with this, I'm looking at it and saying, all right, this is a B, C, possible wave A, B, C, possible wave B, and A, B, C, possible wave C. Does that mean we're done? Not necessarily, but we do have a 50 a 50 simple moving average that's curling back up. We have a flat 200, which obviously we've been struggling at. And so this is, to me, fairly straightforward. If we get over 268.86, then we have a lot of room to move back up to the highs of our wave B. But right now we're struggling with this 200 simple moving average. I also anchored this purple line, which is our prior swing high anchored VWAP. We gapped below it here, and then we came right back up and closed that gap here. And so watch for potentially a back test on that level and a move back higher. That could be a potential pullback buy area as well. Maybe you could use this COVID low anchored VWAP as a stop loss underneath, but you could see we did undercut that, last week here. So yeah, I don't see a great setup here, but it's certainly something I'm going to keep my eye on because it is in a sector that is showing relative strength. Next up is DG, which is Dollar General. And, this was our prior highs in August of last year. Came right back into it in December of last year, and then finally in late April, early March, late March, early April. We broke out, we retested, we continued higher, and we failed right at this 1272 extension on Friday. So watch, in these videos, I'm going to be putting Fibonacci retracement levels. And when you see levels like this, that you have a cluster where there's two Fibonacci retracement or extension and projection levels together like this, this forms a cluster. And so what I'd watch for is potentially a pullback into this level. And generally with these pullbacks, they happen in an ABC form or ABC formation. So right, A, potential watch for that bounce, B, and then C into this level, and then watch if we get that bounce over. Could potentially take a trade because we've seen this act as prior resistance. Generally that turns into support. And so that's what I'm watching for. When I see this cluster right on a key level or a key area of interest, that gets me interested. We also have a inbound golden cross, right? So we had the death cross back here, obviously sent us lower, and now this rebound is curling our 50 back up and our 200 is starting to rise. So when we get that, that's usually a good signal. My only concern is that we're a little extended off of our moving averages. So I would want to see this reset and then potentially bounce higher from here. Okay, next up is GOGL. So for the names that I feel like are newer to people, I'm going to put a little description. So this is a dry bulk shipping company, kind of along the lines of a Zim. Zim is something that you've heard me see me put trade ideas out on. And so this one looks like we're flagging up here, right? Or nice pennant formation. And so again, over prior highs, it's trying to back test 1290. So I would watch for 1290 to hold. We already had a TTM squeeze fire, but honestly, it really wasn't, it was a lackluster fire. We haven't seen that momentum spike yet, but we are holding over 50 RSI, so that looks pretty good. So just keep this one on your radar, GOGL, Golden Ocean Group. Next up is H&R Block, ticker HRB. Another one that, again, I haven't really spoken about, but, prior high, false breakout, final new breakout, retest, bounce. So the blue lines you're seeing here, these are projections. And so the projection is from that swing to this pullback. I'm projecting that right there. And that's what you see right here. This is a 100% projection off of this swing here using Fibonacci. And so you can see that's exactly where we stopped. And now we're continuing higher, and then we hit that 1272 projection right here, and we stopped again. So I would either wait for a pullback to 2710 or watch for a daily close over 2821, targeting 2983 to the upside. We're 4 dots into a squeeze firing, which means we have probably another 2 to 5 days of potential price action to the upside. And again, we had the death cross, temporary death cross. We had the golden cross. And again, we're a little extended off of our moving averages. So I would likely want to see this pullback here and wait for the bounce like that. Next one is Jinko Solar, JKS. This is a solar company. And another one, death cross, and now potential golden cross coming in. We are back into our 618 retracement from this swing right here. And this is our 382 retracement from this swing right there. And so again, I'm looking to see, because these two levels are right above our 200 simple moving average and our 50 simple moving average, I would treat this more as a potential bounce zone. We see we're holding right on 50 RSI, and we have a squeeze setting up. So this one has been setting up for a little while. I'm just waiting for the big breakout I'm watching for is 57.17. It's probably better just to be patient and wait for that level. Yeah, you're going to give up 7 points, but I think once we're over this level, then we have the potential to make a much bigger move higher. So you have to define your risk and define your trade horizon when determining which trades to take and which trades to pass on. Okay, next up is Johnson & Johnson, ticker JNJ. So this is a trade idea I put out in early March, and that was over 173. We did break out that level right here. And you see we back tested our rising trend line right there. Again, back tested the rising trend line, and we came back up again. And now we're looking to possibly retest that rising trend line again at possibly around 179.57, which, no surprise, was our prior high. So this is like a rising broadening formation. And so you could see higher high, higher low, higher high, higher low, higher high, higher low, higher high, waiting for that higher low. And so if we get a potential push into this area here, watch for the bounce. This could be a great area to take this trade off of. And if you missed the 173 breakout, sorry, I said back here, I meant back here. This could be, if you did take that trade, this could be a great place to add. Or if you didn't take this trade, this could be a great place to open up a trade and target 186 to the upside. Okay, next up is Target, ticker TGT. And you could see inverse head and shoulders here. Broke the neckline on Tuesday, Wednesday, on Monday, Tuesday, Wednesday, oh, I apologize, Monday here, Tuesday, Wednesday continuation, Thursday indecisive bearish engulfing candle, Friday sent it back down. So what I would watch for here, again, we have a 618 retrace off of that swing. We have a 382 retrace off of that swing and a 618 retrace off of that swing. And so this I'm going to treat as a zone, a pullback zone. So if we get a pullback into this zone and we start to see a bounce, I would take a trade here. You can keep your stops under the 200 simple moving average because you have this Fibonacci cluster along with a key moving average. You know, to me, that's confluent. And so that's how I would approach this trade. You know, I did put out the trade alert on 236. We got the breakout. We got the push into our first target at 250, as I had mentioned in last week's video. And yeah, it just reversed off that level. That's what happens sometimes with Fibonacci. And so watch for this pullback to those levels I just mentioned. Next up is Twitter. So this one obviously has been moving a lot on the buyout takeover of that Elon Musk has been putting out. And so we had that big push higher here. And, you know, every time you see a big gap like this, you're going to see some a pullback consolidation. So we failed at the 200 here. We started to fill the gap. This is the GapSnake here by TrendSpider. You could see it started to fill that gap here. It held this low just under $45, and now we're starting to bounce higher. I would watch over 50.69 for two reasons. Number one, 618 retrace from that swing high, from this swing high to this swing low. But it's also right on top of that 200. So an extra point of confluence. So I think if we come into that level, we'll probably either flag or form some sort of consolidation pattern. Wait for that pattern to break and get that daily close over 50.69. And I think we could target 54.57 to the upside. Keep in mind, we do have earnings coming up in the next week or so. And last but not least is UNM. This is UNM Group. It's a Chattanooga, a Tennessee-based Fortune 500 insurance company, formerly known as Unum Provident. So again, just a new name, but you know, golden cross here from a prior death cross. We came back into the prior highs here. You can see how we stopped. Then we finally broke out and we had a nice move higher, and now we're starting to pull back. So here's some pullback levels. That 618. That 31.96 is right on top of the prior high. That's likely where I would be watching for a pullback, because generally when you get these breakouts, you eventually get a retest, and the retest is what I would watch for. The problem is earnings are coming up in the next couple of weeks. So just something to keep in mind on. So listen, I know not a lot of great setups coming in for this week. I think that has to be expected just based on the broad market sell-off that we saw. So just keep that in mind. You know, I'm going to continue to scan every single day to see if there are potential setups that are actionable to the upside. But I think we may need to wait at least a day or two, Monday and Tuesday, to see how the market reacts. My gut feeling is we'll probably see a little bit of a bounce, which will, you know, try and suck in the bulls, but watch for a bull trap. I think, you know, what you'll probably wind up seeing, like I mentioned, is that bounce and then a continuation sell-off to the downside. Unfortunately, I think that's what's in the cards for this week. I hope I'm wrong. I'm certainly not going in with any bias, but I want to be prepared either way. So I know I'm at 15 minutes is running a little longer than I normally do, but I wanted to just go into a little more explanation into what I'm looking at this week and just to give you all a little heads up of what to expect. Last but not least, there is a Fed blackout week. So there's going to be no Fed speakers this week, which is a good thing. I feel like they add a lot of noise to the market. So hopefully that gives us a little lift in the market that I think we need right now. So let's just remain cautious, remain patient, and we'll find where the relative strength in the market and where the money is flowing to. Rest assured, I will find that. So have a great day, and I will catch you all in the markets tomorrow.